It's going out there. It's October 21st. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down headlines and tell you what's really moving these markets. I have a great guest for you right now. His name is Scott Lynn, who is the founder and CEO of Masterworks, which, based on its recent capital raise last month, is being valued at over $1 billion. So Masterworks is the only platform in the world that makes it possible to invest in works from some of the greatest artists. This isn't NFTs, guys. This is different. And they do this by tokenizing the art, which you guys should know by now, selling off a small piece so anyone can own them. So as the value of these works go higher and higher, you could trade your shares at a higher price on their secondary market, which they created or regulated for U.S. investors. Or if they happen to buy the painting and then you have a piece in it and they sell it, you get a proceeds or a piece of the proceeds, similar to if you own a stock that was acquired. So you're looking at the art market itself, right? Statistics show from 2000 to 2018, blue chip art has outperformed the S&P 500 by 180%. So this is a massive, massive industry. Deloitte pegs at $1.7 trillion as a total addressable market. But here's the problem. This is a market, which most of you know, that was only available to the elite, ultra wealthy, which you see a lot of these assets, right? In commercial real estate and bonds, a lot of this stuff. Reserved for the guys that you see on Billions or Succession, which just started back up again. Man, I love that show. It's awesome. But Masterworks, with tokenization, has now opened up this market to everyone and anyone. As you can own a piece of art from some of the best, most famous artists in the world. Enough of me talking. Let's bring him in right now. Scott, thanks so much for joining us on Wall Street Unplugged.
Thanks for having me.
So, did a lot of homework on you. I have to say, watching the past 15 years, founded, acquired, sold, or still have a controlling interest as a shareholder in over a dozen tech companies. But I noticed two industries, secular growing industries, that most of those companies pretty much from is online advertising and fintech. So I have to ask, how did this transition into the tokenization of art, where you basically came up with the idea for Masterworks?
Yeah, no, it's a good question. So I've been starting technology companies for 15 years, also collecting art over the same period of time, and have really just appreciated sort of the growth in the asset class. I've watched the value of my own collection go up, and fundamentally thought that this should be an asset class that should be available to everyone. But the only way to allocate is if you have millions of dollars to buy a painting.
So when you're looking, let's go into this, because this is something that you know as well as I do. It's been a market for the elites, right? For the wealthy people. Yet let's talk about a little bit of tokenization. My audience is familiar with this. This is what we did as well, tokenization of our company, where people have an equity stake in Curzio Research. Talk about the tokenization, selling off, a piece of an asset, but now it seems like the market, right, is so much bigger, right? That you're increasing the market size tremendously. I guess there's a learning curve there, but why don't you talk about how this site works and how you can actually, purchase some of these, or a piece of some of these amazing art pieces?
Yeah, so we basically go out and we buy a painting with our own balance sheet capital, and we file it as a public offering with the SEC. So we're, in your words, we're really tokenizing individual works of art. In our words, it's securitizing. So as soon as we securitize a painting, investors essentially purchase shares in the individual artwork, and then when the offering is closed, that offering is then available on the secondary market, so people can trade shares in individual artwork. So it's very similar to how public companies work, but we're doing it for individual pieces of art. Right now the cadence is around one painting every 5 days that's valued somewhere between $1 million and $30 million. So we're rolling out a lot of these artwork specific IPOs at a pretty fast pace.
So how does it work? Because you're saying that you're the only company that actually does this, right? So what's preventing a company from Sotheby's, which you're familiar with, who's been around for hundreds of years, I think close to 300 years, not mistaken, from actually doing something like this? Because when you tokenize, you actually kind of bringing a company public, right? So you're looking at right away, the value of this increases 40-60% on average, which again, you could, based on who you listen to statistics, but your value goes up, which makes it enticing for almost anyone who owns these paintings to do it. But do you see Sotheby's as a competitor, or what kind of proprietary technology do you have to stay ahead of this industry? Because it seems like you guys are here by yourself and own a massive, massive market.
Yeah, I mean, we ask ourselves all the time, like, why are we the only ones doing this? I think when you take a step back and you think about it, as you know, I mean, our world is heavily regulated, right? We're regulated by both the SEC and FINRA, either directly or indirectly. Building the platform, identifying individual objects in the art market that are appreciating at a faster pace. We have the leading research team in the art market to understand how the market overall is performing, and then how individual artist markets are performing. So it's a hard business. On one side, you're sort of an issuer, securitizing these objects. On the other side, you're an asset manager, figuring out which objects are appreciating most quickly. So it's a combination of really tech skills, finance skills, and art skills.
And when it comes to pricing, I mean, this data is public, right? So you have price discovery on some of these things, right? Which I think might get lost in it because maybe only certain people see it. But I mean, I think that has to factor into pricing too, right?
Yeah, it's super interesting. So a lot of people think that the art market is this very opaque market that it's hard to understand. But the reality is, out of $60 billion a year that sells in the art market, roughly half of that sells at public auction. So you have this massive data set that's gone back decades, if not centuries, to help you understand how the market is performing. It's really interesting that very few companies, if any, outside of us, have really utilized that data to understand returns in the art market and build investing products based on that.
And talk about the returns in the art market, which I think people are not familiar with, because people are familiar with the stock market and S&P 500, but you've tracked data going back for close to 20 years. I mean, talk about those returns. I think that'd be surprising for people, especially if they're not familiar with this asset class.
Yeah, so if you just look at art created after World War II, which is defined as contemporary art, that segment of the art market is appreciated at 14% a year for the past 25 years. We also like to focus on how does contemporary art correlate or not correlate with other asset classes, meaning, does it trend in the same direction as public equities, or does it act as a good diversifier for a portfolio? And when you run those correlation studies, the correlation is negligible between art and other asset classes. So I think very high level, we feel like the appreciation rate is really interesting. The correlation factors are really low, and it deserves consideration for an investment portfolio.
So take me through this in detail, because we explained it, but I want to actually bring up your site here. This way we can take a look. So if I want to purchase something or an art piece, right? So you say how it works: find the best artist, purchase the best art, securitize the artwork, right? With Securities Exchange Commission, SEC, allowing anyone to invest. You say you hold the artwork for 3 to 10 years. So if I own that, and you sell it, what happens then? And also, if I own a piece of it, talk about the secondary market where, you could list shares and possibly sell, your shares to somebody else, right?
Yeah. So when we sell the painting, we effectively just distribute proceeds to all shareholders. So if you own 10% of the painting, then you would get 10% of the proceeds. But if you click on trading at the top there, you can actually see the secondary market and how individual artworks are trading on the secondary market. So there you can see how individual paintings are performing on the secondary market over time based on investors trading those shares.
No, that's great stuff. So take me through the learning curve part, because I think if it was the price data, you have the database and you talk about, what you have access to, which is free for investors. And I know when, they got to request an invitation right through you. But what I noticed, what I think is remarkable what you're doing is you're increasing the total addressable market in terms of the people who, just the average investor being able to invest in some of this stuff now. What about the learning curve? Because you do a great job with videos here, understanding art, alternative real estate. I mean, are you getting a lot of questions on that and seeing strong demand? Because I think there's a huge demand for this, but sometimes when it comes to complicated things or things that people don't understand, that gets lost with that learning curve. Hey, we really need to explain this on a 5th grade level to why this is a great market for individual investors, because this is a brand new market to so many people.
Yeah, I mean, look, our high level position is that we want to educate people on the art market very broadly, because we think the characteristics from an investment perspective are really compelling. And then the reality is, if they decide they want to invest in art, the only place to do that today is Masterworks. So when you look at the website, like the price database page of the website, it's actually a really unique database where we've went out and we've collected paper auction catalogs going back 70 or 80 years. had a team of roughly 30 interns identify individual paintings that have been bought and then subsequently sold at public auctions, so you can understand what someone paid for a painting and then what someone sold a painting for. So on an object level, across thousands and thousands of objects, understand how much money collectors made or lost on individual transactions.
How many pieces do you have on your site now, and what's the most expensive? I'm just curious for my own sake.
Yeah, I think we, I'm losing track now, but I think we're on 80 something at this point. The most expensive is a 22, $23 million Basquiat. So we're kind of in this $1 to $30 million range now, where we're buying paintings. But yeah, I would say the average price is probably $5, $6, $7 million.
No, that's great stuff. And now I want to congratulate you. You just raised money, which put your valuation, I believe, and you quote me if I'm wrong, at $1 billion or over $1 billion. That's remarkable, right? I mean, we're not talking NFTs here, just to be clear, right? Tokenization is totally different, right? But what and people may get confused, especially in today's market. But so what are some of the plan? What are the growth plans? I mean, I heard that you plan to buy, I think I saw someplace and that you mentioned $400 million worth of artwork over the next year or something. But what do you plan to do to really grow this? Because, it's such an exciting concept. And again, it's original and you guys are first to the market, which is awesome.
Yeah, we should buy close to $400 million in art this year. I think we'll buy close to $1 billion in art next year. Our growth plan is really just taking kind of this concept that we build around securitizing art and then focusing on all types of distribution. So distributing to website investors, distributing to financial advisors, then eventually distributing to institutions. So our view is that, again, the asset class is really compelling. There's no other place to access it outside of us. So whether you're a large endowment or whether you're a small retail investor, we're kind of the only place to get it. So we're right now just heavily focused on building out teams across all of those segments.
I have to say, when I look at your business model, I think that to me the biggest asset is yes, you have the art, right? But it's the tokenization model. It's your proprietary technology and platform. Is art the only thing you plan on getting into, which is perfectly fine because that's $1.7 trillion total addressable market. Yeah. It's very, very big. But when you're looking at collectibles, I think it's 370 billion collectibles sold just last year. But I feel like it's almost like Amazon used to be just a bookseller, and then it said, "Hey, we have the systems and everything, supply chain in place. Now we can sell anything in the world." The system, I think, is incredible at tokenization, where you're light years ahead of so many people. Is it just art, or have you thought maybe collectibles or something else?
Yeah, I mean, we get asked that question all the time. I think from our perspective, we really view this business as an asset class first business, meaning, we operate the website, we operate the platform to help people gain access to these investment opportunities. But I mean, art is really the only asset class that we know anything about. Like I literally know nothing about classic cars. I know nothing about wine. I know nothing about, a lot of these like Pokemon cards. So our expertise is really, really deep in art. And we believe that as a platform, if you offer investments to investors that don't perform, ultimately they won't come back to the platform. So we're big believers that you have to be an asset manager in these businesses, and you can't just be a platform.
No, that's great stuff. So, again, looking at what you've accomplished in terms of, your career and just seeing like the markets that you've been in, it's incredible to just see to go this direction, which is awesome. But I am going to have a little fun with you because I realized that you founded the company and quote me if I'm wrong. I got to bring this out, man. Sorry, but Punch the Monkey. I mean, did you really invent that? That is like incredible because that banner ads, I mean, talk about late 1990s, right?
Yeah. So for those who are, I guess, in their 40s now or older, they'll remember this. But the story was I was actually in high school when we created that game, and that became the most popular game on the internet in the late 1990s. So I graduated high school having a couple dozen employees and learning how to be a CEO for the first time. And then by the time I was 19, it was well over 100 employees or 50 employees. And that game, I think, was the 14th most popular website on the internet. But yeah, it was, the story behind the Punch the Monkey banner, which some people remember, was just that we tested hundreds and hundreds of ad creatives and, different formats, different graphics, different things. And for whatever reason, that one performed the best. But, that feels like forever ago.
I'm sorry I had to do it to you. I'm sorry, man. I had to do it to you. But okay,
But
we'll finish up with this because I'll have a little fun at the end of the day. But having that marketing background, especially online marketing, what companies do you think are really doing it right? Because it's such a massive secular growth trend, going to grow forever. But I mean, you're probably still involved in a lot of different companies. You're innovative. You seeing companies out there that are made in terms of AI or things like that, and again, that's outside of the scope. I'm just curious, as someone with much knowledge, you probably see like a lot of good stuff within the AI and who's doing it right, and good companies out there.
Yeah, I mean, I guess in terms of customer acquisition, like it's really interesting. I would say that I think a lot of companies do it wrong. Like I think a lot of companies rely on ad agencies. They use kind of high level branding strategies. And in today's world, there is tons of capital, and they just throw money at it. I mean, Masterworks, I think, is a really good example of a company that historically, relative to our peers, hasn't actually spent that much money on marketing, but I think has a bigger brand and is more well known. So yeah, I mean, interestingly, when you say that, there's not an obvious one that comes to mind for me.
No, and again, I just like to pick your mind about things like that because I know you've been in so many different growth industries. But listen, we're doing this interview late in the day. I appreciate it. I know how busy you are. Again, congratulations on your capital raise. If someone wants to find out more information, learn more about you or about your company, I mean, what's the easiest way for them to do that? Yeah.
Just go to www.masterworks.com, request access, and then mention that you saw us here, and we'll help you skip the wait list.
No, it sounds great. All right. So thank you so much for coming on. And we'll have you on again soon. I really appreciate it. Thanks, Scott.
Thanks for having me.
Look, guys, great stuff from Scott. I mean, this is what tokenization is. It's just one small form of it. And say what we did with our company. Same thing. We're selling off a piece of shareholders, allowing them to own the equity stake in Curzio Research, but you're able to do it on the ground floor. But you look at Masterworks, it's one application, opening up a $1.7 trillion market to the masses. You wonder why I get so excited. You wonder why I base my whole company on this trend. But you're looking at how many different applications, like companies like ours, and lots of companies are coming to us now to learn how to do this. Now this market's opening up. The real estate market, $250 trillion plus in illiquid assets. Why would they do this? Because it raises the value, because you're almost making your stock publicly traded now, which inflates the value by 40 to 60%. Makes sense, right? If you're looking at a private company, and what are you going to trade at 4 times, 5 times EBITDA, whatever earnings? You're looking at a publicly traded company right now is trading at 21 times, right? You have access to the capital markets. You can raise money, you can raise cash. You have a high valuation. Use your stock to grow a company. It's a big difference. That's why you would sell off 20% of a commercial real estate portfolio that's illiquid at $100 million. You can sell 20% to investors where they could trade this. Now, individual investors could own a piece of commercial real estate, which they never have access to, which is awesome, right? Especially today's market, low interest rates forever and ever and ever and ever and ever and ever. Holy cow. And then you look at the company bringing in $20 million in cash, and their assets probably going to go even higher, because that's normally what happens when you turn your company into a public entity. It's a win-win for everyone involved. That's how you disrupt markets. And you do all this by avoiding and going around the middleman on Wall Street, which is why these guys are dying, are jumping into this industry. You're seeing 55% of the banks are now invested in crypto. It's going to be 100%. They have no choice. These are middlemen that generate huge fees. And now you get seeing all this disruption in crypto. In the global bond market, what's that? Over $120 trillion? MBA contracts that are guaranteed. They can bring in more money. You can have a piece of that. Maybe they provide an interest for that, but they, $100 million contract over 5 years, guaranteed. Sell off 30% of it. If it's an MBA play, whatever it is, they're bringing in money for themselves. Now you could own that. That's, guaranteed contract, and maybe they provide interest on that. But I mean, you look at Babe Ruth rookie cards. I mean, any asset. Now why I'm so excited about this trend. I mean, I always jump out of my shoes. It's not just bullshit, right? This is something I'm basing my company on, basing my reputation on. This is something that makes sense. If you look at Jeff Bezos, he's like, you always focus on the customer. This is great for the customer. That's how I always looked at this industry. This is something that's great for retail investors, that they can get in a lot of these things on the ground floor. Not when they come out these crazy, stupid valuations, which is insane. Insane. But this whole market's $550 trillion in assets that could be tokenized. The whole thing's not going to get tokenized. Maybe 40, 30% doesn't get tokenized. If 1% gets tokenized, that's $5 trillion. The biggest total addressable market I've ever seen at 550, but just 1% is $5 trillion. That makes it bigger than cybersecurity, EVs, AI, and marijuana trends combined. Combined. Masterworks. Billion-dollar valuation like that. That's how much capital they raised. This is why you need to learn about tokenization, its massive potential, which all happens through crypto. So I sent out a video recently. You should have seen it by now. The special offer to describe the crypto intelligence, actually the lowest price we offered since our launch 4 years ago. But it's not about subscribing. Just please watch the video, okay? The potential gains you're going to see that you can make in this industry. Of course, you're taking on risk, right? But you can't make the, you get 300%, 400% returns. But where are you going to go, Robinhood or the Coinbases that come out, these crazy valuations, the snowflakes that come out, whatever, 70 billion? That's the first opportunity you got a chance to buy that stock at 70 billion. I mean, it's come down from that valuation, but on day one, after the 100% gain, that's when it's open to retail at 70 billion. Tell you what, you're buying it. People are loving. Those insiders are loving it. They're selling the crap out of it to you. They're like, holy cow, I can't believe this. And you're like, wow, I'm in Snowflake. I'm so happy. But most of the growth already took place. But you're going to see the massive growth in just your average crypto. I bring up free sites in the video. It's like 16, 17, 18 minutes long. Very short, but you're going to understand the potential of why you really need to get into crypto and learn more about it. This is where you're going to see the most disruption from, the most innovation. This is the sector. It's here. It's no surprise Bitcoin's hitting its high levels. It's a check mark on every risk that's out there. You can say inflation. You can say, I hate Wall Street, crazy government spending, limited supply. Hey, that's a perfect recipe for it to go higher. As it goes higher, you're going to see a lot of probably crappy things go higher as well. There's still a lot of crap in this industry, but you need someone to guide you through it. But with crypto intelligence, you're going to have access to a lot of these great ideas on the ground floor, including a lot of the security token offerings that are going to be launched. They're going to come out like crazy. Believe me, I know the pipelines. I know the companies that are doing this. I hear from them. They're looking at us as a platform to gain more interest, which we have a lot of people that are in this industry. What does that mean? We're going to get a look, or first look, a lot of these companies. And that means you can get the chance to invest early in these deals at discounts before they officially launch on platforms like T0. That's normal. Even with Exodus, did the same thing. If you invest early on, you get 10% discount or more tokens and stuff before they actually, you could trade these things on a platform. Even we offered a discount to investors as well when we launched. Able to get it at a discount before we officially launched. If you're interested in subscribing, please do it through the link to the video. Again, it's the best offer that you'll see on this since we launched. It's 4 years ago. Only open for 7 days. They're going to raise the price considerably. You'll see why, because when you see the video, I'm sharing the portfolio with you. The whole portfolio, winners, losers. You'll see the whole entire thing. Not cherry picking a winner here. You're going to see. Wait till you see the returns that you could possibly make in this. And again, someone who's covered all these industries, everything, just to see how so many investors, in terms of the risk that they're taking, the reward is so much greater compared to investing in some of the small caps, especially mid caps. I mean, few of you may have, 15x gains or 10x gains or had Netflix a while ago. This happens often within this industry. There's a lot of companies that take off, that surge in value. I'm not talking about Dogecoins either and the BS and all that, the pump and dump schemes. There's very, very good companies within this, the innovative companies. You're not seeing a lot of bullshit come out. You're seeing Anderson Horowitz, some of the top venture capitalists investing in this, banks investing in it, Fidelity's investing in it. You're seeing these names on these new companies that are coming out to the market, which is incredible. These are big companies with deep pockets investing in this industry right now. It's here. It's not going away. It's integrated into everything. They can't get rid of it now. It's too late. They'll crash the markets. Too many banks are integrating blockchain and Bitcoin and Ethereum into their systems. And everybody wants it. Their clients want it, and they have no choice because they're charging these massive fees for things you're not going to need fees for anymore. You're not going to get charged. Look at the DeFi market, $80 billion growing 10x. I mean, put that in perspective. It's already twice the size of marijuana? Everyone wants the best of marijuana. It's great. Oh, trend. Awesome. DeFi, twice as big, growing much, much more faster. This is just one little segment inside of crypto. You got NFTs, security tokens. We have 7 days. If you'd like to get a subscription, take us up on a subscription to the newsletter. It's Crypto Intelligence. If not, no worries. But watch the video anyway. You need to educate yourself on this sector. I've been saying it for at least 2 to 3 years. If you listen, you probably bought into Bitcoin, bought into a couple of things, and doing very, very well. That's just the beginning. That's the foundation. Now you're going to see a lot of the innovation take place, just like what you saw with the internet, guys. The same thing with the internet. When you're looking at the beginning part in the 90s, I mean, streaming didn't exist. 5G didn't exist. AI didn't exist. Social media didn't exist. These are all innovations off of the internet. Now, crypto, the foundation's built. Now you're going to see all those innovations getting much, much easier. By the way, do not buy Bitcoin through that ETF, please. Please just buy it. There's so many sites you can buy it on. It's bad for retail investors, good for institutions. I'm surprised that was the one that they passed. You're going to see more coming out. Anyway, just a little tidbit there. But we watch the video. I share my portfolio. You're going to see the performance of the portfolio. I'm not going to show you the stock picks. Otherwise, I'll lose all my subscribers. I paid a lot of money for it. But you're going to see all the gains. There's 5 stocks right now you could buy, or 5 cryptos you could buy right now that are in all those trends I just mentioned within crypto. Very exciting stuff. Again, open up for 7 days if you're interested. Take it. If not, no worries. But definitely watch the video no matter what. It's for free. It'll be worth 15, 16 minutes of your time, and you'll understand the huge gains, and it'll force you to get into this industry and learn more about it, because it really, really, really is incredible. And you're going to see lots of innovation, lots of smart people, lots of great people in this industry. And I'm really excited about it. Excited to be a part of it, excited to be all in on it. And it's going to be fun in the years and decades ahead. So guys, that's it for me. I really appreciate all the support. And I'll see you guys next week. Take care.